I'm Erick Bertsch with miningclips.com, and this is your daily market debrief for Monday, February 1st, 2016. North American equities fell under pressure today, giving back some of last week's gains due to weak economic data out of the U.S., continued concerns over China's weakening economy, and comments by Russia, Iran, and OPEC stating that they are not in talks to reduce oil supply at the moment, and Russia going even further to say that last Friday's exuberance in oil price movement was idiotic. Oil gave back last week's gains, falling $2.40 a barrel. That's a 6.6% decline on the day. Crude oil WTI futures on the NYMEX closed out today's session at $31.32 a barrel. The Dow retained most of last week's gains, giving up 17 points on the day to close at 16,449, with the S&P remaining flat at 1,939 and the Nasdaq moving up 6 points to close at 4,620. Canadian equities, on the other hand, did not fare as well, with the energy sector leading the declines on oil price volatility. The TSX closed down 147.76 points to end the day at 12,624. On a brighter note, the Canadian dollar continued to hold its own, moving up 0.39 points to close at 71.79 cents US. In fact, many major currencies moved up against the US dollar throughout the day, including the euro and the British pound. In metals, New York spot gold closed up $10.30 an ounce today, again on concerns over weak U.S. economic data, Chinese uncertainties, and the drop in oil prices. The shiny metal closed the day at $1,128 an ounce. Silver's price movement was a little more subdued, closing up 8 cents at $14.33 an ounce. High-grade copper remained flat today, closing at $2.06 a pound according to COMEX data. It's often said that gold is a useless commodity to buy or hold. It has no yield, and it costs money to mine and store it. When I consider the cautious nature of central banks at the moment, and now with Japan possibly joining the ranks of the ECB and the central banks of Sweden, Denmark, and Switzerland in negative territory, no yield sounds better than negative yield for the time being. I'm sure we'll see much more excitement and surprises as the trading year unfolds. For miningclips.com, I'm Erick Bertsch.